from here? I mean, is the trend from where you see it to continue to be lower?
Technically, it isn't looking good. Yesterday, we saw the 50-day moving average being broken on the downside, and today that weakness continued. So that really says that the market is in for some weakness in the short term. If we have a look at what happened on the market today, down by 0.4%, closing near the lows of the session with over $4 billion worth of stock being traded. Now, this is despite retail sales coming in with a rise of 0.5%. It's the fourth consecutive month of increases that we've seen in the numbers, and yet, despite this, we didn't see a reaction in terms of Harvey Norman, Myer, David Jones, all of these finishing in the red. Not only that, we saw an RBA decision, no change as expected. The Australian dollar plummeted on the back of that, and it was interesting to hear some of the commentary that if we did see a fall in the Aussie dollar over the next 3 to 4 months, that the RBA would be happy to hold steady interest rates for the whole of 2014. But the market really just ignoring that. We saw the market falling off after that interest rate decision, and the ugliest sector by far was the gold space. We saw gold prices down 2.3% overnight. In fact, if we have a look at gold prices, this is gold prices over the last 2 years. I've just drawn that 200-day moving average line in, and you can see we're way below that 200-day moving average line, still looking very bearish. And the gold sector falling more than the gold price. The gold price was down 2.3%. The gold subsector today down a massive 7%. Stocks like Silver Lake, Evolution Mining, Kingsgate, Resolute, all losing more than 12% in today's session. So certainly the blood in the gold sector continuing, and most of the damage being done by that material space today.
Points on the market. I mean, you made mention of the gold, more along those lines?
For is iron ore. It's held up very well in 2013. We saw some Port Hedland statistics coming out today, and we actually did see a drop-off in the month of November, down by 3%, and in particular the China shipments down quite significantly. We have a look at the Chinese shipments in the month of November, down by 11% at 22.3 million tonnes. That was partially offset. Korea did see a doubling in terms of their shipments, and Japan was also up by around about a third. And although it is down month on month, it is up from a year ago. So the Port Hedland shipments up by 29%, and to China up by 38%. So I think that's one area to watch. Traditionally, it is wintertime in China, and some of those steel mills do start to drop off. Also watching BHP Billiton in that space. If we have a look at BHP Billiton shares, this is what it looks like over the last 1 year. That red line is just that 100-day moving average, and you can see that we're very close to that at the moment. So the next couple of sessions, very important technically for BHP. We've also heard from Rio Tinto today saying that they plan to cut their capital expenditure plans from $14 billion down to $8 billion in 2015. So iron ore, I think, is one place to watch. The other thing to watch is the number of IPOs hitting the market in December. We're going to see more than $3 billion hitting the market in December. And while that's nothing in comparison to the market capitalisation of the Australian Stock Exchange, the ASX, what it does mean is that $3 billion, more than $3 billion, it's quite a lot in terms of allocation of new money. So we could see some of that money coming away from the market to make room for these IPOs. And Nine is doing its book build at the moment. That's set to start on the market on Friday. We're also watching Dick Smith, Covermore, and a whole raft of other ones as well.